All right, traders, George here, and time for another installment of the Day Trading Essentials series that I've been doing. Today I'm going to talk about day trading, oil, and the Econ reports relative to the inventories for crude. And I'll show you some great performance numbers as well. For starters, the Econ report specific to oil comes out 10:30 Eastern Wednesdays. That's 7:30 Pacific on this chart here. So today, Wednesday the 23rd, right about here, that report hit the wire and there was a bit of a pop, and it went all the way back, actually below from where that news report fired off, and then it ended up making a new structure high, pulling back and testing this resistance zone here as support. So a fair bit of volatility. Swing low to swing high here, that's $400. If you bought a structure breakout here, you were up $220. If you didn't take any profits, you saw profits go to break even and then sub $200. If you didn't have any exit strategy, you may have covered there and who knows what. So it really gets down to what is the rule set that you're following. What are you supposed to be doing? It's true that there can be some volatility that comes into the market, but it may or may not be an issue for you. The real issue is, do you have the fortitude to continue to knock out your rule set, whatever it happens to be? If you think you're going to look at the report and assume that the inventories are down and price should go up, that's going to catch up with you in a big way, and that would be trading on quote-unquote fundamentals, and that has zero expectancy to doing that. So you don't want to do that. You want to look at a chart, come up with a systemic way to follow repeatable information that's chart driven. This happens to be a tick chart, and it does a great job, a 150 tick chart. It does a great job of breaking up price moves. A volume chart is another nice one to look at. Some people use minute charts and they don't do as good a job. That could make trading volatility a bit more difficult. There it is. So these 5-minute candles here, popping this thing up and racing it back down. By the time you recognize that something's moved in favor or moved against, that 5-minute candle could be taking a lot of steam out of the move or a lot of steam out of the potential entry. Just real quick, here's a 200 volume, and going back to that point in time here, also does a good job along the lines of what the tick chart did. So should you trade when this report comes out? Well, what has your testing showed you? What setups and signals are you following, and how have they done? Here's some information that will be pretty illuminating. A couple of my auto trade strategies here. For starters, one of the cluster trade strategies. This is what happened today on the 150 tick chart, which is what is driving this strategy. This happened to be long before it hit a scalper for profit, and then the second position stop goes to break even, and it exited on this move below. And then as the report hit the wire, this is what happened. No signals were generated by my strategy here. Going back to just after the 4th of July, this thing has done just over $3,000 on 50 trades. Okay, that also includes last Wednesday when we also had a report, and the results were different back then, but the expectancy ongoing is positive here. Here's a different strategy, my stop and reverse strategy, where this one was very active today. It got short on the heels of the news here. Scalper hit, stopped and reversed long for a little gain, hit scalper, and then stopped and reversed on the trader. That had both positions stopped out, reset, short here, scalper hit, and then the extended contract here rotates to long. That rolls over and is stopped out, and then another long here rolls over and it stopped out. So this was pretty active today. Actually picked up a couple good runners here and a couple small losses, but this one's done $4,840 in the same period of time. More trades though, 132. But this is also not taking into account when these reports come out. When you hit the go button on the auto trader, it's going to put the orders in whether you like it or not, and that's what happens. Here's another interesting thing. There were one of these strategies had no losing trades today. The other strategy had 5 losing trades today. Last Wednesday they flipped. One of them had no losing trades, the other one had 5 losing trades. Here's a view of what happened last Wednesday on the cluster trader based on this strategy here. It was actually short early in the morning, got stopped out. Then it went long, had one position stopped out, and had another position go on to hit. target, and then it wasn't until much later in the day that it got long and stopped out. So that's what that one did last Wednesday. And then here's the other strategy last Wednesday, which was also a bit more active. It was short going into the report. Price popped on the report. Short here, 2 winners. Long here, 2 winners. Short here, 2 winners. Long here, 2 winners. So this one was really on fire throughout and didn't have a position on board when that report hit. And that's not something I was choosing to do. That's just the way the system handled it. So when you think about these econ reports, it's true that there can be some volatility, but it really gets down to what's the setup and signal that you're following. Where's your stop? Where's your target? How would you re-enter a trend? And how has that done over time? I've got 2 strategies here that have had great expectancy throughout July. 2 key oil inventory dates coming after the holidays where everyone's back at their desk trading, so really representative of true market action there. So there are some reports that will introduce volatility. The main thing to think about is your risk control and your setups and signals, and there's nothing that beats taking that setup and signal, scrolling through price, and cataloging what it's done. Put it into Excel and you'll know exactly what's happened. If you happen to have the cluster trader or the stop and reverse model, you'll be able to do it the way I just did it there. But you don't need to have something that sophisticated. You can use the good old nuts and bolt method of doing the heavy lifting and scrolling back through price. Too many traders will not do that, and they'll make suppositions about what they think may or may not be happening without really having the true data. Catalog it manually, and when you do, you're able to proceed with confidence, and you're not going to be worried about volatility. You're just going to be worried, is my system putting the trades on for me, or am I executing my manual orders the way the model needs me to? So just some insight there to the oil inventory reports, how they can affect the market, and really at the end of the day, if you've got a rule set that's got positive expectancy, the data shows that you just plow through those reports, you keep taking the setups and signals, and if any of you can go out there and find a filter or a rule set that benefits you around those reports, love to see it. It might be very specific to what you're doing, but it would also be a relatively unique occurrence that you're able to find something that's saving you some money or even giving you better gains. So that'll do it for now. We'll see you all back in the live room.